Perfume Enterprise is a merchandise business and it's a partnership business founded by Amir Masara as a CEO, and we have 3 co-founders. Our business started on 1 January 2020 and our shop is located at Lot 97, Jalan Sultan Omar, Kuala Terengganu. And our operates hour is from 8 AM to 9 PM. The first product we produced is a vanilla fresh and mint tea ice. After we got a lot of demand, we produced new scents and then we decided to launch lotion and body mist. We have a different size of packaging in travel size, medium and large size, with the range price around 50 ringgit to 200 ringgit. At first, our business started with a 115,000 ringgit capital and the amount is added subsequently as the demand increased. In our financial report, the financial statement made based on months of June 2023, and we hired 1 salesperson with a salary 1,800 ringgit monthly, and part of our building purchase is rent to tenant, so it can gain our revenue more. Furthermore, we also advertise our product to social media to engage more customers. Our vision in this business is to provide a feeling of more confidence and refresh throughout the day, like the ice in our business name. And we also make sure to not use any ingredient that contain chemicals in our products. So the main ingredients we use is a pure essential oil to maintain the natural quality and last long.
Assalamualaikum, I am Irina, one of the founders of Ice Perfume Enterprise. I would like to share with you the adjusted trial balance as at 30 June of 2023. And the first element is sales. So as we know, Ice Perfume is a merchandising business, so we sell through the selling of our product of perfume, lotion and body mist. And then in order to make sales, we need the purchases, which is 9,500, and the return inwards is only apply for the return of sales. And we have inventory. This is the opening inventory that was brought from the previous month. And then we have a salary, which is only for 1 salesperson, 1,800 above the minimum wage. And then we have other expenses incurred. Interest on loan is based on the loan, 2%. And then we have other utility, advertising, and other income that we receive from the rent. Part of the building was rent to other. And then we have a dividend from our savings. And then we have 4 non-current assets. Only these 2 building and fixture fittings that has accumulated depreciation, so we're going to count them later on. And then you have other current asset, current liability, and then this capital is maintained throughout the business. From 150,000 now it adds up to 171,000 to cater up all the demands. And then we have the adjusting entries. Okay, so let's take a look. The furniture is depreciated using straight line method, charged over 10 years. So we go to the line A. Find A. This is the A. So this is the adjusting entries for fixtures and fittings. We know this is the cost. B19 is the cost of fixture and fittings, and then we will divide by its useful life of 10 years, and then multiple because you only count for the month, so you only times with 1/12. And that same goes to the building depreciation, but this one is over 25 years because building lasts longer. As you can see, we find B is here. Okay, so this is the formula. And we have utility expenses incurred was actually 1,200. So if you see, the initial that we put here is only 800, so there are still expenses that have not been paid. We go to C, we go to C, 1,200, we minus with the amount that we have here. And then for the opening stock, closing stock, we go to D and E. This is 1,000. It's the same as the inventory brought from the previous month, and then we record for the closing stock 1,800, so make sure that is on the same line here. And then we have the rent of 300 has not been received yet, so meaning that the amount of the rent that we put here 1,200, then another 300, which is 1,500. So if you look at F, this is 1,500, you minus that one. Make sure you put the adjusting on the other line here. So move on to the adjusted trial balance. We use the what if function, and as you can see from the formula up here, and this what if function is to test if it's true or false. So it will do certain actions. So in this situation, we make sure that the debit side, if it's less than the credit and the outcome is positive number, then it is on debit. If not, it will just leave empty here. Same goes to the credit. Is the opposite. If the sum of credit less with the debit is greater than the 0, then it is credit side. If not, you just leave empty. Make sure that when you do that, you will sum all of the numbers using the fill handle. So you don't have to fill one by one because it's a bit troublesome if you fill one by one. Let's move on to the statement of profit or loss of Ice Perfume Enterprise. So in this situation, we are using the relative sale reference, which means that all the sales here in statement is the targeted sales, and we use the sales of origin from the adjusted trial balance. So as you can see from the formula, visual formulas, we adjust here. We don't write it back. We just refer to the last sales. But there are certain that you have to write on your own, such as last, because it's new word, and then all of this are reference from the original sales. Take a look at the statement. So we're using the letters format. So sales with less with written inwards. We use the formula. This N8 is minus by N9. We get the net sales. And to find the COGS, we're using the opening inventory, our purchases, and all these numbers we get from the adjusted trial balance. And hence you receive the cost of goods sold from opening inventory, add with the purchases less closing inventory, receive this. And to find the gross profit, you just deduct the net sales, deduct with this one. So you can see from the formula. And at revenue, that we only have 2, rent receive and dividend receive. So here, and then salary, these are the expenses. You just add up here sum. You can see sum is sum of this. How many here? 6 expenses. And then the depreciation is also from the adjusted, so you don't have to calculate here because you already show the calculation in the other part of the adjusting entries. So the net profit is easy. You just take from the gross profit, you add with this, less with this, hence the formula here. It's exactly that I have shown you one by one. So here you can clearly see the net profit is 8,341, and it's really easy because it refers to the original sales. So if you change any number here, it will automatically change here as well, but it's calculated right if you use the right formula for the right format. Last but not least, let's take a look at the statement of financial position. And as you can see here, we have non-current asset. There are only 2 of them that has accumulated depreciation. This is because this motor vehicle and office equipment just brought in the business for the month, so there is no depreciation calculated. So we just make sure that the amount on the right here is all carrying value, which means the cost must deduct with its accumulated depreciation. So you just refer back to the cell in your adjusted trial balance. So you just add up all these values of current and current asset, and you just sum up. You can see only sum on this column. Then you classify the current asset. There are 5, including the accrued, and these are all the values that you have done. You just sum again all the values. And you know to make sure that it's balanced, you just sum up of both non-current asset and current asset. Hence the formula here, just add up these 2 values. Then according to the format, we have finance part, you should put capital here, and then add net profit from here. The cell here is already calculated for everything, so it's automatic. You just put the amount here. And also for the non-current liability, we have 2, just add up of the sum here. You can see only for the certain part. And current liabilities, you have only 2, just add up. You can see the sum of all the values from finance by until current liabilities, and that's all. But to sum up everything, if you make sure that all the cells in your adjusted trial balance is already balanced and it's the right amount and the right formula, it'll be easier for you to fill in all the statement that you get. So in this statement, you can clearly see your gross profit, net profit, and all the current asset, non-current asset, for you to do a ratio analysis for your financial position of your company.
Next, we move to the last part for section 1, which is financial statement analysis by using vertical technique and ratio analysis in Excel. Firstly, for the ratio analysis, there are 3 types of ratio, which are profitability ratio, liquidity ratio, and efficiency ratio.
For the profitability ratio, our company use this ratio to measure the performance of our business during an accounting period. Under this ratio, it's divided by two types, which are the gross profit margin and net profit margin. So let's take a look in our Excel for ratio analysis. Here, for the gross profit margin, we have the formula for the gross profit margin, which are gross profit we divide by net sales and multiply by 100. So all the value here we will take from our statement of profit or loss for the month ended 30 June 2023. For the gross profit margin, we will get the answer is 39.29%. It means that every 1 ringgit sales made, our business will earn 39 cents of gross profit. Next, for net profit margin, it's measure how much of our company's revenue actually turns into profits. So we will know how far costs are covered by revenue and what is available to our business after deduct all expense in particular period. So the formula is net profit divided by net sales and multiply by 100. So we will get 27.08%, and it means that for every 1 ringgit sales made, the business will earn 27 cents of net profit. Second, we have the liquidity ratio. This ratio is used to measure our ability to meet its current obligations when they are due. It means being able to pay what we owe at the right time. Two types of liquidity ratio, which are current ratio. For the formula is current asset will divide by current liabilities. Here is the formula. So we will get 8.74 ratio 1, which means the business has 8 ringgit and 74 cents of current assets to pay 1 ringgit of its current liability. Next, for the quick ratio, for the formula is current asset we deduct all the prepayments and we divide by current liabilities, and we will get 8.742. So the business has 8 ringgit 74 cents of liquid asset to pay 1 ringgit of its current liability. So the last ratio, we have the efficiency ratio. Efficiency ratio measure the efficiency of our business in managing its assets to generate revenue. So the formula for inventory turnover is cost of goods sold divided by average inventories, and we will get the answer is 13.36 times. So it means that our business replace inventory for 13.36 times in a year if we have the consistent value for every month. To get the average inventory, opening inventory we plus we close inventory and divide by 2. So we will take the value from our statement of profit or loss, which are the open inventory is 1000 and closing inventory is 1800. So you just plus these two value and divide by 2 and we'll get the value. So you apply in this formula and we will get the answer. Next, for average collection period, the formula is account receivable divided by credit sales and multiply by 365 days. So we get the 136 days, which is the time for our business collect payment from our account receivable in a year if we have the consistent amount for every month for our business. Next, we move to vertical analysis. The purpose is to understand the proportional contribution of each expense and revenue item to the total revenue. Vertical analysis helps assess the relative significance of different components in the statement of profit or loss by expressing each line with percentage, and it provides the cost structure and the impact of each expense to the overall profitability. And it is very important to the financial statement users, including the investor and the creditors, to know the information because they can compare the different size within the same company in the different month, which is June, and for the previous month is the May. Based on the vertical analysis from our sales in June, the gross profit is 39.29%, while the balance is 60.71% for the cost of goods sold. For the May, we have the gross profit, which is 38.05%, and the balance for COGS, or cost of goods sold, is 61.95%. The gross profit in June for our company is higher than May because our company has reduced our cost of sales from 61.95% to 60.71%. Next, in May, advertising expense took the most portion from the net sales, which is 7.32%. As a result of the sales that have made or the expense that has incurring as a part of the operation in relation to sales or revenue, our company no need to do cost reduction measure because our company has already improved from the previous month of May. Now in June, there are already improvement for our net profit. If we look in the Excel, our net profit already increased from 23.63% to 27.08%. All in all, the increase in net profit was due to the significant decrease in interest expense of the business.
Let's move to the next part, which is cost value profit, or we call as a CVP. CVP is an accounting technique to assess how cost and profit react to change in the level of business activity, or we call as a break-even analysis, which means the point where company neither makes any profit nor loss, or the total sale is just enough to cover the total cost. So in this CVP session, we decide to sell a leather shoes with a selling price per unit is 250 ringgit, and the variable cost per unit is 100, and the total fixed cost is 90,000 ringgit. And our company produce 400 units up to 1,001 units. As we know, the fixed cost keep maintained, and the total variable cost based on the total units multiplied to the variable cost, and by total up amount variable cost and fixed cost, we can get the total cost, and by multiply the unit of products to selling price, we can know the total sales. To know the company produce is gain, profit or loss, we can minus the total sales to the total cost. As we know, we prepare the CVP is to avoid company suffering any loss. So in this company, if they produce 400 and 500 units, the company will suffer a loss. If we can see 600 is here, 600 units reach the BAP point, which means the company neither suffer any loss or profit. So any additional units sold 600 above will increase the company income. Conclusion, the company need to produce 600 and above to gain their more profit.
Next, for the CVP worksheet of the 50% decrease of selling price. So the selling price per unit is 212 ringgit 50 cents. How do we got that? The selling price of 250 ringgit, we times with 50%, and then we got the 37 ringgit 50 cents. And then the selling price of 250 ringgit, we times with 37 ringgit 50 cents, and then we got the new selling price, which is 212 ringgit 50 cents. And for the variable cost is 100 ringgit, and the total fixed cost is 90,000 ringgit. We produce 400 number of units to 1,100 number of units. To get the variable cost, we times the number of unit of 400 with the variable cost per unit of 100 ringgit, and then we got the 40,000 ringgit of variable cost. For the total cost, the total fixed cost of 90,000 ringgit, we add with the variable cost of 40,000 ringgit, and then we got the 130,000 ringgit of total cost. For the total sales, we times the number of unit of 400 with the selling price per unit of 212 ringgit 50 cents, and then we got the 85,000 ringgit of total sales. How do we know whether there is a profit or loss? When we subtract the total sales with the total cost, if it becomes a negative value, so it is a loss. For this 400 number of units, the 85,000 ringgit of total sales we minus with the 1,300 ringgit of total cost, so we got the negative 45,000 ringgit, so it is a loss. As you can see, the BEP value is at 800 number of units. It is rise from 600 number of units to 800 number of units, when the price drops by 37 ringgit 50 cents. We can see from 400 units to 700 units, there is a negative value. That means it is a loss. So the company should have not produced 400 units up to 700 units because they will be the loss for the company. Otherwise, the company should have produced 900 units up to 1,100 units because they will be the profit for the company. So this is a cost volume profit forecast of our company. The total fixed cost still remain the same at price 90,000 ringgit, and for the variable cost, it is increasing by 10,000 ringgit for each 100 number of units, and the total sales also increasing by 10,000 ringgit for each 100 number of units, and the total sales is increasing. In summary, Microsoft Excel application has helped ICE Perfumes Company in financial management accounting. It assists in making important calculations that support asset valuation, financial reporting, and decision making. From the trial balance, it helps the company to locate if any errors have been made in the accounting system entries. As part of the transparency and accountability in the company, statement of profit or loss, statement of financial position, and related ratios are all in excellent standing and represent faithfully. Apart from that, the CVP worksheet has supported in the company to identify the break-even point of a single product, where the total sales and the total costs are equal. With the formula that has been applied in Microsoft Excel, it helps the company to track the profit or loss amount if there is any price drop in the company. This enables the company to decide and analyze the right price for a product. In a nutshell, ICE Perfumes Enterprise is able to perform basic calculation and financial statement, making it easy for the company to create charts and graphical presentation by applying Excel in the basic accounting.